Agricultural crowdfunding platforms, they're beginning to look like Ponzi schemes in Nigeria because they're controlled by weak regulations. With the crude nature of farming, coupled with the general lack of information about agro-businesses, people generally settle for other investment options regardless of whether they get better return on investment, which is their ROI, compared to farming. Now, the truth, however, is that although farming is a risky venture, it is highly lucrative. And for what it's worth, credit will go to the agro-funding players redefining the idea of investment in farming as we know it. Arise business analyst Chika Mbonu joins me now in the studio for more on this. You're welcome, sir. So,
morning.
Good morning to you. Help us out. What is crowdfunding and how come it has become so attractive in Nigeria?
Okay, I mean, crowdfunding, as is defined, is the practice of raising small amounts of money for a project, from large numbers of individuals, people. It's an alternative form of finance. Usually these days it's done through the internet, especially in the Western world. So it's a new fad. We've seen in the past various ways in which investors can raise money for their projects. So this is a new one now, internet-driven, basically raising little amounts of money from large number of people, to let their projects go. Bringing it home to Nigeria, they look at the chase for higher returns. I look at it from two perspectives.
Okay.
The first one is that there are projects to be financed. There are real projects to be financed. Basically, there are farm projects who get the bank channels, other similar agencies, and have gone out there to the public to say, we have a good project, come and participate in it and profit with us when we make the returns. So that's the one aspect. There's a need for funds like that, who can access the usual fund channels, whether from commercial banks or similar organizations. Now, but the other thing that has raised the level of this is the fact that in Nigeria, in the last months now, we have been flush with liquidity. When the windows for the open market operation was shut for private and individual investors, and with the maturing automobiles, so you find that so much liquidity out there, investor funds out there looking for, where they can get higher, decent returns and higher yields. So, for example, by this February, in the last few days, the yield on TB is just about 5.97%.
Very low.
Now, if you compare this to, October last year, let's just go to October last year, it's about almost 13%.
Huge difference.
Yeah. But if you even take a year back and move backwards, you will recall that at the time that these yields on T-bills were about 18%.
Yes.
So it was a fact then for a lot of business people, a lot of commercial business people, to even shut down their businesses and take their capital and put in treasury bills. Indeed, my neighbor was one of the the participants.
So he enjoyed
and
some.
Lately, he has been asking me what's gone wrong with Nigeria. That 18% has become 5.7%.
Right.
So you have those kind of people who are chasing for hunting for very high yields and looking for where they can get returns. So they become prey to any people who are masquerading and pushing out investments for higher returns. So that's basically what's the issue.
What I see. Okay, so what about the risks associated with these funds?
Well, the risks, especially for Nigeria, are major. Do recall that, for example, the country survived or haven't survived the saga.
Yes.
I mean, different reports put it between 10 and 15 billion, the amount of money Nigerians lost in that saga. And represented, a Ponzi scheme. A Ponzi scheme basically is a scheme where some people, promise high returns to investors and pushing out the story that they are investing in some like oil and gas or very high return projects, and not knowing that the first investors are being paid off with subsequent money from subsequent investors, and there's no underlying project. So you have that kind of situation. So the risk there is the fact that just like MMM, that you don't know who is behind the project. You just see people who tell you to come and invest and promise very stupendous returns, unimaginable returns, and tell you that there's one that just came out the other day. It talks about 50% of maize over 6 months period.
Yes.
Well, I'm not saying that it's anything, but the issue is that those kind of returns, are scary. And experience has shown us that when you have, those kind of returns, you need to probe, go to the bottom, probe deeper.
Right.
And so there's no opportunity for due diligence by the prospective investors. What they see and what they read is these where package documents are sent out, and you just go and invest, and you don't know, no office, no nothing, no location, and then most dangerously, no regulation.
Right.
For Nigeria now, for example, there's no regulation for that. So we are hoping, because you can look at it from two scenarios and find and say who will regulate it. So if those who push out these proposals see that they're asking for money, which means they're raising public money from investors, so that can be under SEC, like an IPO, under SEC, monitoring. However, if it is the case, they say that they're not necessarily they're asking for people to lend them money or whatever, which means they're taking deposits.
Yes.
And central bank, you are not a licensed institution to take deposits. So that's another issue. Central bank has to step in there. So the issue of the fact that most of these things are amorphous, most times there are no regulation, behind them. You don't know who the board of directors are. You don't know what the project. You don't even know where the farm is, and so it's a very big risk. There's nobody that has gone and certified the projects as genuine or bona fide, or the projections are bona fide, and that whatever they push out there that they're going to give to you, will happen. Right. And so that's a major problem. That's why it's very risky.
So thanks for explaining the risk. Now, what should the regulatory authorities be doing to step in here?
We should learn from what is happening, what has happened in the past. A lot of homes, a lot of people use their children's school fees, to go and put into the MMM program then. So many business people lost their money, even some bankers. Right. They use some customer deposits and go and put into them. And when it collapsed, it caused a lot of problems for the societal problem for the country. We should learn from that. Yes. It's also flash your mind back to when we had the stock market crisis in Nigeria, where even everybody became a
market analyst.
Market analyst. People were not investing in their business again. I knew some customers in Alaba market who buy electronics, who import electronics. They stopped importing electronics. Everybody now was a stockbroker. What was Zenith today? What was GTB price today? And that. And when the share prices crashed, it affected so many homes. So many homes. So that's basically, so it's important, therefore, that the regulatory authorities in Nigeria, starting from SEC, starting from CBN, and even the police, even the EFCC, everybody comes in to make sure that they understand, leave the veil, understand the promoters for these businesses, and look at the promises they're making, whether it's genuine and whether they can keep it.
They can keep it. Just to follow up on that, because I remember I've read somewhere the SEC was talking about chasing down wonder banks, offering all these huge returns and these schemes. But I think it was Mary Woodok or so, she kept making references to closing down physical offices. We've closed this office. And you've just, in your earlier comments, you were saying that some of them don't even have offices. They're online.
They're online.
So does that not present a challenge for the authorities?
It's a challenge, but that's where also that the education must continue. Announcements must continue, whether in the churches, whether it's in the mosques, whether it's in the radio, whether it's in the TV, to continue to educate people on the risks associated with this overnight wealth. People are looking for shortcut. I mean, you cannot divorce it from the macroeconomic environment that we're facing. Right. Even people, when people spend their money on import goods now, people are not buying. When manufacturing companies, produce, a lot of people are not buying. So people are frustrated and looking for shortcut to it. And that's why I've seen all these kind of things have, risen. And so, therefore, if you find some people who are scrupulous investors, who have a bad mind, they can now, thrive under this kind of condition and create Trojan horses for investors who will think that the returns are there, because the environment is just very, very, very weak.
Okay, so if well regulated, how can these funds help in the development of the economy if they are well regulated?
Yeah, because it says if you cannot create a copy, because in the Western world, these things have worked. Every day we'll see the kind of things that happen, whether it's GoFundMe and other similar programs, for good initiatives, whether it's sports, whether it's music. Like there were some music people who cannot get support from the usual former channels, but they believe in their project, and so they push it out there, and a lot of people will invest and push their music out. There are also products that will come out, and a lot of people will not. They may not get money from the normal channels, so they can go through this way. So it's same thing here. You have budding entrepreneurs who believe in their projects. They can actually prepare the packages and push it out there, and people will support them, especially if they cannot get funds from the channels.
Okay, well, hopeful. Chika Mbonu, thank you so much for joining us.